What's up, guys? Moe Mamba here. So we're gonna recap the two swings that I posted on Twitter for you guys, CCJ and NEE, two swing puts. Basically, they both had the same strategy. But before we get started real quick, I'm gonna go over the strategy a bit and show you guys how I tend to play it, right? It's not just, I look at the ticker and go ahead and take the trade, right? So first thing you want to know is what's the trend of the market, right? So obviously on SPY here, we're bearish. We're on a downtrend here and we're bearish. The macro, right? So the macro perception of the market is bearish. The micro, you will have these dead cat bounces within, correct? Okay, so let's look at the macro for now. So you have this huge downtrend going, right? Within this downtrend, you will have gaps, right? Gap downs. Okay. So this is where you'll look to take advantage of these gap downs. You have to be a bit patient, but once you get these gap downs, this will result in multiple tickers having gap downs as well, right? A gap, for those of you that don't know, is, for example, this is a gap, right? You still have to, you want to look for price action to come and fill the gap, right? So this is a gap. Today was a huge gap. This is a gap. That's a gap. So you'll look for these gaps to come back and fill, right? So this was a gap, but we came back eventually, filled it, and climbed higher as we closed above the gap, right? So that's one thing. Another thing is entry, your stop losses, and your take profit, okay? So all these three result from levels, key levels, right? Key levels. Your stop loss is going to be a key level. Your entry is going to be a key level, and your take profits will be key levels as well. Okay, so far we went over, you have your macro downtrend. When you want to look at the micro perception of the market, is you'll have these dead cat bounces, right? These dead cat bounces. And when you get these dead cat bounces by the market, you tend, on those tickers, when they do have that gap down, you tend to come up and fill those gaps, right? So what I look to play is, after we fill that gap, I'm looking to grab puts to the downside, right? I'm looking to grab this trade to the downside. Why? Because the macro market is bearish, okay? And you'll get these, gap fills with micro bounces, aka your dead cat bounce, right? Another thing is when, so when does this stop working, right? So there will be a pivotal point where, I will take a loss, right? I will take, maybe 1, 2, 3, 4 losses, trying to play the gap fill reversal. I'll show you a way to try to prevent that as well. There's keys to that as well. But I might get caught, and fill a gap, and then I, enter the trade, and next day it goes up and I stop out. A key thing is you want to minimize your loss, right? You want to maximize your gain and you want to minimize your loss, right? So I'll go over how to minimize those losses when you're looking to swing those gap fill reversals. Your take profit, you want to maximize your gains, right? You want to set targets. That doesn't necessarily mean you have to hold until your target hits, right? So if I set a target, let's say we come up tomorrow and we fill the gap on SPY up here. Let me clear these drawings right here real quick. These were from today. So let's say we come up here and fill the gap on SPY, right? You have to note there's another gap up here to fill, right? Okay. And if we do come up, fill the gap, what I'll look for here is a test and then a close below the gap fill. So near market close, maybe last 10 minutes of the market, 5 minutes of the market, where it's looking like, okay, you're obviously going to close below this gap fill after filling the gap, after coming up here and testing this and then rejecting and come down. That's a good good risk reward for me. And I'll go ahead and take that trade. So where will my stop loss be, right? My stop loss will be as if the next day we come back up here, climb and hold this level, right? We flip this level into support. I'll go ahead and close my trade. I'm not going to hold it and keep holding and keep holding it just on hopium, right? You have to respect your TA in the long run. It will save you a lot of money. If you do just trade on hopium, you will get those 1, 2, 3, lucky trades. But overall, in the long run, you will end up losing more than you make, right? So back to maximizing your gain, right? So let's say I do, let's say SPY comes up, fills this gap here, and I'll set a target back here, right? Which is the open. This was the huge gap, right? So that'll be my target, right? That'll initially be my target. There's no other price action we have recently, but that'll be my price target, as this is the most recent price action, correct? So once I grab that trade, that doesn't mean I'm gonna hold till SPY, comes down here. I might and might not. It just depends on my percentage gain, right? I usually like to trim once we hit 20%, 20+%. I'll take a quarter out. I really like trimming in quarters recently. I used to trim half my position and then half at the target. But what I've been doing lately is trimming a quarter on the way down and then trimming the next quarter on the way down, and then keeping my stop loss where at my entry of those premiums, not at my entry of where I entered on the price action of SPY, that the price of SPY, the exact price of SPY. Why? Because by the time it comes back up, it climbs over here, you'll be in the negative on those premiums. So I'm half here. So if SPY comes all the way down here, I've trimmed a quarter, trimmed another, I'm half out, right? My other half, I'll keep stop loss entry. This saves me, right? I already secured profits. If it breaks down and holds this level, I'm looking for further downside, right? So I'm not really missing, I'm not gonna miss, I'll try not to miss, the move down, right? But eventually I'll end up trimming a quarter, and then I'll have the last quarter left. I like to let, just let it run. If I have a second target, I'll see if it hits it or not. As you'll see in CCJ and NEE, where we actually hit both targets there. Those were perfect examples. But that's just a little education on that. Let's go ahead and get into the swings I took here. Okay, so this was a target up here. Okay, so what are we looking at here? We have CCJ. This was the level. This was the gap I was looking at right here, right? This was the gap fill I was looking at. We didn't quite fill it over here, but we did end up coming here. So I ended up noticing CCJ on this day, right? Fortunately, I was just lucky on that. But either way, this trade would have played out because my stop loss would have never triggered, as I'm looking to close. If we close above this gap fill level, I cut my trade. If I did enter on this day here, right, this tested the gap, filled the gap, came back down and closed right here, right? This would have triggered an entry for me. Let's say the next day we had a gap up, which we did, right? We had a gap up, you tested that, fell right back through, and you ended up closing the day down here, right? So fortunately, I ended up noticing it on this day. I think credit goes out to actually Mr. Trendwatch. He put my eye on it. Yeah, I think he grabbed weekly puts on this. But I went ahead and looked at the chart, saw there was a gap to be filled, and I decided to swing puts on this near close. I grabbed some puts near close. Why? Because I was waiting to see if we closed below this gap fill, which we did. Next, right? So I grabbed my trade. Usually I grab monthly expirations, a minimum of a month out. Rarely do I do like 2 weeks out. That's just due to theta decay. When you're swinging, you're looking for a few days out, right? You're looking for these to play out over time. When you grab a weekly expiration, you're looking to swing, that theta, those Greeks are going to kill you, especially even if it ends up going your way. But let's say the next day you had a test over here, it'll kill those premiums. And then the third day, let's say you had a test, or let's just say the second day, and then it started finally coming down. But, your premiums got hurt a bit, where you'll probably have to, the price is back down here and you're finally break even or something, right? So I do like going 30 days out. And those 30 days out, you'll be pretty surprised at times where, I've had 30 day plus, probably 45 days expiration on swings in the premium room on the Discord, where the next day my swings were up 50%, 60%. So don't let that get to your head. Do not let, percentage, how much you're up by get to your head. It's better to be safe than sorry. So I do like playing minimum 30 days out. So after entry on this gap fill, I set my target. My target was this key support level, right? I wanted this to come back and test as we're up here. And in your next support level would be where down here. As you see, we tested this, rejected, and we finally got a nice breakout. And then on the move down here, you've tested this level, you've tested this level, held it, you finally broke it, but came back up above and closed it and had a nice move back up. And then once you broke through, had a gnarly candle here, really nasty, and continued the downtrend. So I use this price action here and also this price action here, where after this nice breakout, this nice move up, we finally rejected up here and came back down, right? And then you also had this candle test where you attempted to break and hold, failed, and came back down and closed. And this next one finally got a nice move upward, right? Came back down, tested the level, climbed back above and closed. So I go up, I go by my key levels on candle closes. I do not do wicks, I do candle closes for confirmation, right? I want confirmation. So even day trading on your 5-minute time frames, I go candle closes because those I take these wicks as fake outs in a way. I guess you could say that, but I prefer candle closes. So that's why I lined up this first target, was because of price action here, here, and right there, right? That was my first target. And in our favor, this ended up, gapping down pretty nice here and ended up hitting our first target. This is where I trimmed my first trim here. And then after that, or I might have trimmed actually on this day. Yeah, I think I trimmed a quarter off on this day here for about 40% or 24%. I forgot, because there's two, and I trim, in quarter. So there's a lot of trimming going on. So I believe I trimmed on this candle here, a quarter of my position, and then held the rest. Next candle, hit our target, trimmed more. I'm holding half now. We gapped down pretty nice here. So there's gaps to fill to the upside, right? That's something to note, So you have a gap to fill up here and then a gap to fill up here, right? So we'll just keep that level as a target for the gap fill to the upside. So we ended up gapping down here. My next trim was at this gap down here, right? So I ended up trimming some here. Don't know for how much that went up. So then I was holding a quarter. I let the rest run for target two. Target two, same concept, just price action. Price action for my second target here. Off, candle. So this is a daily time frame, by the way, but candle tests over here and also right here, right? So that was the second target, and look at that, hit our target and closed right on it. So beautiful level. This was a beautiful level here. Hit our second target and closed right there. All right, so that was a gap fill reversal play. Again, filled the gap, came back down, and this is even more bearish, especially when you come here, test it, close below the next candle, test it, you came back down, closed below, formed a red on the daily, bearish, really bearish here, added further conviction, and then the rest is history. This dropped, I think this ran 200%, maybe a little over 200%. I think we got out at like 136% overall. Next one, NEE. But real quick, this is what I'm talking about, is when you have, these moves down, these, you got a nice bounce up here, and then you finally came back up here and filled the gap and played it to the downside. So you'll have, when you have the market end up bouncing for you, maybe sometimes you'll have the indices, right, consolidating, right? So a lot of these tickers will end up taking advantage of consolidation by the indices. You'll tend to note that where, SPY's just bouncing around in a range, but these tickers are taking advantage and just climbing up, climbing up, climbing up. And, you have to look at the macro market, and the macro market is bearish. I'm going to go ahead and grab a put here, right? My stop loss would have been, of course, break and hold this level. So, you remember, guys, I told you that it's, you have to know when to enter. You have to know when your stop losses and then your targets, right? And those are all key levels. Those are all key levels. You have to be able to know how to line up your key levels. That's key, because where are you going to trim? Where are you going to exit, right? How much room do you have to the downside, right? How much room till you hit your next, support, right? So gap up and gap downs automatically, for me, I line them up and they become support and resistance. So on this one, another clear one here, NEE, we had a gap to fill up here, ended up gapping up, filling the gap. We entered at close here. We grabbed it at peak. Actually, we grabbed this at the very peak. after testing the level, coming back down slightly, actually dropped. Yeah, so tested the level up here and then dropped. We grabbed this NE on this candle on this day. So you guys might see this as it's not far out, but you know, you have to set your targets. You have to respect your TA and always follow your TA. So my target one was pretty close, but it had to be the gap, right? It had to be the gap, as this was going to be support. Next day, what'd you get by NEE? You got a nice drop. You got a nice drop. What did it do? It tested this gap level and climbed right back up, right? And closed in the green, actually. So you had a green on the daily, bounced off the gap, filled it, closed. But guess what I did? I ended up trimming a quarter down here, held the rest. We were still up nicely. I think we were up like 40 cents on those premiums, even at the close. So no reason, right? So no reason to sell, no reason to close my position. Next day, gap down, came back up, maybe some resistance on the shorter time frames here, drop. So what happens now? You remember I was telling you earlier on SPY that you want to watch if it ends up closing below your gap fill, okay, further downside, you already trimmed a quarter, you're holding, you want to take advantage of the move, right? You want to take advantage of the move as much as possible, right? So what happened here is we ended up closing below gap fill. I noted to you guys on Twitter, and I noted in the premium room that we did close below gap fill. This is bearish to me. You filled the gap, climbed back up, had a nice climb up, closed green. Next day, gap down, rejected, closed below gap fill, bearish. I'm looking for further downside, right? Next day, came back up. This is what you want to see, right? You want resistance confirmation. Resistance confirmation is when after you close below a support level, you want the next candle to come up and reject that what was once support, forming resistance. And that's exactly what we did on NEE. Again, adding more conviction to my bearish sentiment, right? So this ended up rejecting, closing down here. I think I trimmed another quarter on this day. And then I think I trimmed over here on this day. We gap down. So there's gaps to fill here and there's a gap to fill there. Let me line this up. Gap to fill right there and a gap to fill right there, right? So gap fill reversals. So we ended up trimming on this day here. So I think I took a quarter out here and then a quarter out here. And then I think I took another quarter out here and held the last for target 2. And we ended up gapping down exactly to target 2. And we all, you know, we had a really nasty day today and this dropped pretty hard. This ran, I think, for about 280% here. But we took advantage of the majority of the move. Might not be done yet. You might, you know, continue further down. But this is the gap reversal play overall. And again, key levels. So let's just remove these so you guys won't get confused here. So the targets, right? Targets, my first target was gap, a gap fill. Come down and fill this gap. Come down, fill this gap. This, you know, that's automatically a target for me. I don't care how close it is. That's a target. I have to respect my TA, right? Because you might bounce, and which you did over here. So either way, we were safe. I trimmed a quarter of my position. So I was safe. My stop loss was entry, never hit. And then, you know, the rest is history. And then this target 2, consolidation here. Consolidation forms a key level. You got nice consolidation, nice test of this level right here, and then also a close over here, reject, and then a drop. And then you finally came back up, closed above this level, and look what you got. You got confirmation support, support confirmation. Next candle tested, closed back above, and you got a nice move up. So that's the overall gist of the gap fill reversal play. You know, I added some education in here in regards, you know, to your key levels, how to take profit, when to take profit, that is, where to line up your targets, your entry. So for example, if this ended up closing above here, I'm not going to get it. Even though it filled the gap, I'm not closing it, closed above the gap fill. That will not trigger my entry. I wanted to test the gap fill and close below, triggers my entry. Closes above gap fill, that's a no-no for me. Why would I, right? That's bullish for me. You know, that's bullshit. Unless we get the next day, red day, come back down, close below the level, you know, okay, that's bearish. You failed to hold what? You failed to confirm support after climbing above this gap fill level. These were 2 really great trades. I'm glad I shared them on Twitter. A lot of education in these trades. They played out to the T. Both targets on both trades hit. So that's your gap fill reversal play. Just go, you know, go ahead and post any questions you guys got in the comments. below, and I'll try to get to them as soon as possible. I hope you guys were able to learn a thing or two off this gap fill reversal strategy. What I'm looking for now is, you know, maybe a dead cat bounce on the market. You do have really, you know, huge gaps to fill on SPY. You know, eventually you will come and fill these. You know, it might be Wednesday we have FOMC. You might have a nice day tomorrow. We'll see. Futures are currently green at the moment. What you'll look for is a close above this level for a potential gap fill up here, and then same concept, a close above that gap fill level for a move up here to fill this gap. All right. So I'll see you guys in the premium room. You guys take care.